Are you waiting for homes to become affordable again without realizing the math has already started to shift? Stay tuned. Thanks for watching. I'm Shirley with Shirley's Real Estate Group at John L. Scott. I've been helping clients across the Puget Sound for over 27 years, and this is the show where we talk real, buying and selling real estate, that is. Today we're breaking down the numbers behind affordability in early 2026 and what they're actually showing. Let's dive in. Interest rate stability. Let's look at what's actually happening with rates. We have officially moved out of the rate shock phase of the last 2 years. After peaking nearly 8% in late 2023, mortgage rates have largely stabilized in the low 6% range. While we aren't seeing the 3% rates of the past, this new stability is actually a good thing. It's taking that whipsaw effect out of the home buying and allowing for more predictable long-term planning. The math of your monthly payment. Affordability is a math problem, not a feeling. On a $500,000 loan, the difference between a 7.26% rate and today's roughly 6% rate is about $350 to $419 every single month. That's over $4,000 a year in principal and interest savings. For many of my clients, this is the gap that makes a home go from out of reach to realistic. As I'm recording this video, rates for FHA and VA range from 5.5% to 5.75%. We're at the lowest level seen in 3 years right now. Stabilization versus spike. This chart shows we've moved from frenzy to stability. While annual price growth has moderated significantly compared to the double-digit spikes of 2021, February 2026 data shows that month-over-month prices are beginning to firm up again. We aren't seeing a crash. We're seeing a market that has repriced itself towards a healthier, more sustainable pace of appreciation. Now let's look at the data for our local counties in Puget Sound. Let's start with King County. The median price sits at $935,000. While that's down 5.6% from last year, it's actually increased 8.6% just since January. Homes are averaging 46 days on market, faster than January, but still giving you time to think. Snohomish County, the median price is $720,000. Annual prices are down 2.04%, but they rose 4.2% since last month. Inventory has surged 50% year over year, meaning you finally have real choices. Pierce County, median prices are $584,000. This area remains resilient with prices up about 6% both annually and monthly. Homes are averaging 64 days on market. Thurston County, the median price is $515,000. We see a slight annual cooling of 4.3%, but month-over-month bump of 2.4%. In both counties, that 64-day average days on market means fewer bidding war headaches and more room for negotiations and inspections. Kittitas County, a tale of two markets. Now let's jump to the other side of the mountains to Kittitas County. If you look at the graph, you'll see the county-wide median price is $600,000, which is actually up about 5% year over year. However, that single number doesn't tell the whole story. This is truly a tale of two markets. First, we have Ellensburg. This area is driving that price growth with a median of $537,000, up 21% from last year. It remains very competitive with homes selling in roughly 36 days. But the upper county, Cle Elum, Roslyn, and Ronald, this is where the real opportunity for buyers has opened up. In Cle Elum, while prices are up, homes are now setting for an average of 143 days. In Ronald, the median price has actually dipped over 10% to $842,000. When you see homes setting for over 100 days, the math changes. It gives you the power to negotiate repairs and closing costs in a way we haven't seen in years. The market isn't good or bad. It's just providing a completely different set of opportunities than we've seen in years. Remember, when we see these longer days on market, like 64 days in Pierce and Thurston or 143 days in Cle Elum, that translates directly into buyer advantages. Time to decide. You can actually sleep on a decision instead of making an offer in the driveway. Negotiating power. We are seeing more opportunities to negotiate for price reductions, repair credits, or even closing cost assistance. Due diligence, you have the breathing room to perform full inspections and truly vet a property before committing. If you want to see how this new math applies to your specific neighborhood or budget, click on the link in the description below to visit my contact page at shirleyjohnlscott.com. I'm happy to run a custom report for you so you can make a move based on facts, not headlines. Don't forget to like and subscribe to stay ahead of the Puget Sound market. Until next time, keep dreaming big and aiming high.